And the new PwC report shows that 3/4 of all industries saw a deterioration in working capital performance in the second quarter of this year compared with last year. Days working capital is how many days it takes a company to convert its working capital into revenue. Companies that take fewer days are more efficient. But the number of days has increased by 5 days on average, that's globally. In Europe, it's 8 days. Daniel Lacalle is a seasoned business analyst and has helped bring companies to IPO. He's now the chief economist at the Tressis hedge fund. I asked him why the PricewaterhouseCoopers report is significant.
And what that tells us is that companies are suffering a lot more than what big macro data tells us, is that the situation in the day-to-day operations for companies shows a weakening of revenues and a very troublesome burden in terms of costs. And it's particularly negative in the European Union companies that they surveyed.
And can we see from the report, is it that costs have gone up or just primarily that revenue has come down?
I think that the interesting thing about this report is that both things have worsened. Is that on one side, the revenue stream of most companies has weakened quite significantly from one year to another. And I think that also another very important factor is that costs have not improved at all in the majority of sectors. In fact, in numerous, costs have actually increased. And that comes back to the European Union, for example, where labor costs, taxes, and operating expenses have remained stubbornly high. So those two elements are actually weakening for companies. It is true as well that the working capital to sales ratio, which tends to tell us whether a company is going to go into really large financial problems soon, is still at a percentage that is not as a negative or as bad as we saw in previous occasions and in previous crises. However, in some sectors, it is extremely close to bankruptcy levels.
And considering we're talking about new lockdowns, we have new lockdowns in certain parts of Europe, what will it mean for these companies moving forward when you look at this new data?
It is very, very concerning. Why? Because many politicians look at the possibility of new lockdowns as if the stability and the strength of most businesses remains relatively okay. And it is not the case. Is that new lockdowns would come on top of an economy that is on its knees. And that, I think, is going to generate much larger and accelerated problems in the financial situation of many businesses if new lockdowns are imposed, because they're going to find that just when they were starting to get a little bit of activity back in their businesses, but the working capital situation was actually not improving, then a new slump in activity would truly damage the economy.
Worrying piece of news, but not overly surprising, unfortunately. Daniel, appreciate you breaking it down. Thanks so much.
Thank you very much. Have a good day.